Alrighty, good afternoon, folks. Thanks for joining us for our practical guidance on EIDL and SBA programs. Today, we're going to have Joe Bonilla moderating the panel event. Alongside him, he'll have Daniel Kane and William Winter. Appreciate you guys joining us. And Joe, I'm going to kick it off to you.
Great, appreciate it, Sam. And good afternoon. I'm Joe Bonilla with Relentless Awareness, a leading communications firm based here in the Capital Region with offices in Las Vegas and South Carolina. And I'll be your moderator for this afternoon's discussion on practical guidance for the EIDL and SBA programs presented by IgniteU. We'll be discussing best strategies and uses for the Economic Injury Disaster Loan, better known as the EIDL or EIDL. This existing program was expanded significantly under the CARES Act passed earlier this year, in addition to the Paycheck Protection Program or PPP. The EIDL exists through the Small Business Administration, in which there are many differences that you need to be made aware of between the PPP, the EIDL, and other SBA programs. We are joined today by two incredible panelists this afternoon. Dan Kane, founder and attorney at the law office of Daniel T. Kane, PLLC, and Will Winter, owner of Winter Accounting and Advising, LLC. I'll give the panelists a few minutes to introduce themselves. Dan, do you like to take the first stab?
Sure. Joe, first, thank you for moderating this panel on SBA programs and specifically EIDL. I think it's a great resource for people out there, especially small businesses that are trying to navigate the COVID-19 pandemic. Also, thanks to IgniteU for hosting this panel and continuing to provide resources to all of the small businesses throughout New York State, as well as throughout the country in many respects. My law firm is similar to that. I am a solo practitioner based in New York. I help a lot of New York startups and New York small businesses, but I also have some federal practices. I'm a registered patent attorney and a former SBA attorney. So you can imagine during the COVID-19 pandemic, I've been advising clients extensively on the Paycheck Protection Program, the Economic Injury Disaster Loan Program, Section 1112 subsidies under the CARES Act, and other programs that SBA has put forward during this difficult time for our nation's small businesses. Not to be too doom and gloom, the EIDL loan and the PPP loan programs in particular are vital to small businesses right now. Yelp recently put out an estimate of how many small businesses we're going to be losing over the next couple months, and they said over 60% of small businesses nationwide have already shuttered permanently. So again, thank you, Joe. Thank you, IgniteU, to hosting this great panel, and I'm looking forward to the discussion.
Excellent. Thank you, Dan. Will? You still on mute, Will.
Sorry about that.
No worries.
Yep. Thank you, Joe, for having me. This is definitely always a pleasure to be able to, share experiences with business owners out there, and team up with individuals such as Dan and IgniteU to just give information. Be there for these business owners in a time of need. Going back to March, we've been front and center in terms of managing and helping business owners out, funding options, mainly the EIDL and the PPP loan programs, and the nuances of what the funds could be used for, and other gray areas that are still sort of gray, but that's why we're here today, to kind of maybe shed some light on those areas. I've had my practice for about 4 years, but I've been practicing accounting for about close to 20 now. This year has been a year filled with turbulence, helping our clients out, helping our business clients out. There was no such thing as a tax deadline or a tax season this year. The whole year was tax season to us, helping our business owners out, other business owners out there, just helping them, remain compliant and, frankly, remain in business. So thanks for having me, and I look forward to sharing what we can to clarify any issues that the listeners have.
I appreciate that, Will. And before we get into a few questions about EIDL and existing SBA programs, I want to remind anybody attending here via WebEx that there is a Q&A that we will take after we get some questions from Dan and Will first. So if you have any questions, please put them into the chat and we will get to them as we can. My first question for you two gentlemen is, how can businesses use EIDL funds to basically for their operations right now? So I'll start off first with Dan.
Sure. So this is the real basic piece of EIDL. And I'm actually going to juxtapose it to the Paycheck Protection Program, because for better or worse, there's a lot of content out there from lawyers, accountants, SBA personnel, and other influencers about what the Paycheck Protection Program is, but not a whole lot when it comes to economic injury disaster loans. The Paycheck Protection Program is for payroll and certain non-payroll expenses. So generally, you're using your Paycheck Protection Program loan or PPP loan to pay off some of your payroll for your business. You may also be able to use your PPP loan for non-payroll, including rent, mortgage, interest, and utility payments. EIDL is far more expansive because its intent is to get small businesses and get businesses affected by disasters to the position they would have been in if not for that disaster. And they want you to be able to use those funds for working capital or to pay off your existing obligations, accounts payable. But generally, it has a wide swath of what you can use it for. SBA is very specific on what you can't use it for, and we'll talk about that in a few minutes. But generally, using it for working capital is the best thing that a small business can do. And that also includes payroll. So you might even have some duplication of your funds. But remember, you can use it for supplies. You can use it for payroll, utilities, rent, certain bills you have. And it's, again, far more extensive than PPP, which is very restricted.
Will, do you want to add to that?
Yeah, absolutely. Dan touches on a good point. The topic of this webinar leaves out PPP, the Payment Protection Program. But it is worth mentioning because there's a lot of restrictions there with the PPP loan versus the EIDL. What I will add to the PPP comments that Dan has made, we have a lot of business owners out there that are shareholder employees or self-employed individuals that may not have payroll, or they may just be paying themselves a salary because they're an S corporation shareholder and they're required to under the tax law. And there are further limitations to how you can expend the PPP funds and have those funds forgiven. A lot of businesses now, and even sole proprietors and shareholder employees are trying to figure out how they can get this loan forgiven. On the flip side, you have the EIDL loan program where there's a lot more flexibility there. You can use it for any reasonable means to carry on your business. Where the gray area sometimes lies, and there's no exception, is when do you cross over that threshold to where, all right, now the funds can't be used for XYZ purposes. And that's why Dan could probably attest to this, that we highly recommend that anyone that is unsure of how to spend the EIDL loan funds to reach out to a CPA and or an attorney, because it's just good to know how you can spend those funds before you spend them. You don't want to backtrack. If you've heard me speak in other webinars, I hate backtracking. Even backtracking with clients, I hate when our business owner clients have to backtrack and go back and fix things that shouldn't happen. So it's good to be proactive, folks. Make sure you know what you can use those funds on and use them. Survive. Allow your business to continue. Retain your employees. Keep your clients happy. And most of all, be safe. A lot of those funds could be used to, modify your business due to this new landscape we have with COVID-19. You may need to put different equipment in place. You may need to buy supplies that you didn't have to buy previously. That's what those funds could be used for.
So, and both of you spoke about this, but what are some of those regulatory ineligible uses for EIDL proceeds? And how should businesses deal with that gray area between eligible and ineligible use?
Sure. If it's okay, Will, I'll take this one.
Absolutely.
So the first thing that I would say to any small business owner who is trying to do anything with SBA is look at the regulations. Obviously, as an attorney, I'd like you to seek my help or another professional's help when it comes to interpreting regulations. But SBA has the mission of making it simple enough for a small business owner to understand. Obviously, sometimes they fail at that, to be perfectly candid. But the EIDL loan regulations are pretty straightforward, and then you get into some gray areas thereafter. So the first thing I would say is look at SBA Standard Operating Procedures, or SOP 5039. And that is the standard operating procedures for SBA when it comes to EIDL loans. And a lot of the content in there is based on SBA's regulations in Title 13 of the CFR, the Code of Federal Regulations. And in the SOP, they go into specifically the 11 categories of ineligible uses for EIDL. And with your permission, I'm going to just read through these really quickly.
Sure.
You can't, one, payment of any dividends or bonuses. Can't disperse to owners, partners, officers, directors, or stockholders unless it's directly related to the performance of services for the benefit of the borrower. You can't repay loans from stockholders or principals unless you can show that it's absolutely necessary for the hardship of the stockholder or principal during this difficult time. 4, expansion of facilities and acquisition of fixed assets. This is a very important one, so I'll say it again. Expansion of facilities and acquisition of fixed assets is an ineligible use of EIDL loans. 5, repair and replacement of physical damage. 6, refinancing your long-term debt. 7, paying down or paying off loans, including SBA loans. 8, payment of any direct federal debt, except IRS obligations. So when it comes to taxes, you have some wiggle room with what you can use your EIDL loan for. 9, payment of any penalty resulting from non-compliance with any law, regulation, or order. So basically any federal penalty. 10, contractor malfeasance, so contract disputes. 11, relocation. So you can't get SBA to give you an EIDL loan to then move your business. And I know that's a lot of information, so I'll say it again, and I'll also put it in the chat. SBA 5039 has a lot of great information for small business owners, and SBA routinely updates their standard operating procedures to reflect the program. EIDL is somewhat nuanced in that it existed before COVID, but is heavily relied on by businesses during COVID. And there have been some changes, but generally the advice in there is good. And I would just say, if anyone has any questions on whether something fits in one of those areas or not, you can contact SBA, you can contact an attorney, you can contact your CPA, but generally get someone's advice on what's in the gray area before you pay for anything that even looks like it's in one of those 11 categories.
Will, do you want to add to that?
Yeah, I think Dan touched on most of it, and he had to read the standard of procedures there. I will say to add, for starters, I would segregate the funds that you get through the EIDL. Maybe keep them in a separate bank account where you can draw down on those funds and just use, those funds for the purposes that, we had mentioned, and not for the purposes that, Dan just spelled out. This way, if the SBA or the government comes back and wants you to substantiate your what you spent these funds on, all you're gonna really need to do is pull the bank statements and show them that these are what we used the funds for. One thing I want to clarify, I want maybe to ask Dan. So one of those standard procedures surprised me: the acquisition of fixed assets. Now, what happens if a business is required to purchase an asset due to the virus? Maybe some sort of, sanitary machine that sanitizes equipment, or, what happens if, we're in an office environment and our printer goes down and we have to spend $3,000 on another printer. So it sounds like in that example with the printer, we should probably not draw down on our idle funds for the printer. But there may be an exception.
Well, so you touch on something that I talk to clients about all the time, is a lot of these categories are very broad. And the reason for that is SBA doesn't want small businesses to take existing SBA loan programs and try and use an EIDL for that purpose. An example is the repair of physical damage. The reason for that clause in there, that prohibition, is because SBA offers loans, disaster loans for physical repairs. So they don't want people to be able to double dip. Same thing with fixed assets. Fixed assets normally is purchased under an SBA 504 or maybe even an SBA 7A loan. And so they have this exclusion. But what you're talking about is absolutely true for a lot of businesses. A lot of businesses need to acquire PPE now to operate. Is that a fixed asset? Probably not. But the sanitation equipment that you're talking about that you can definitely sell during a dissolution of a business, that's a fixed asset. But the barometer, the standard that you're supposed to use for EIDL loan uses is it required for the continuation of your business? Is it paid in working capital? And if you can make the argument that it's included in there and that it's required for continuing operations, you're less in the ineligible and more in a gray area that you have to wait and see if SBA is going to ding you for it. If you want to be super proactive, I'd highly recommend it. Email SBA at disasterassistance@sba.gov. They will answer any question you have, and if you get that email from them, you now have an affirmation from them that yes, you can use it for that. That's perfectly fine. Often SBA might toe the line and not give you a response or not give you a clear response because they don't want to take on that liability. But Will, you touch on a great point that unfortunately the regulations haven't caught up with. And I think maybe if there's a HEROES Act 2 passed or something like that, they'll throw that in there as an additional correction.
I've had a fair amount of clients ask me if they can buy a new car with these funds. So I think we're both in agreement that that would be an expenditure that definitely should not be made with EIDL loan proceeds, even if the business owner could say the car is 100% business. I think that's a real big indicator, and I want to highlight that because I've gotten that question a lot, we're bound to have at least a handful of listeners that have either gone down that route or have asked that question or want that question answered. So I want to throw that out there.
Yeah,
so let me talk about that a little bit real quick, because we talk about these different common errors coming up for small businesses. So you bring up a vehicle purchase, but what are other common errors that both of you are seeing for small business owners?
A second business location. I think whether you have an astronomically good reason to expand, and that's the key word right there, expand, right? Yep. Have a second office location, you would think that that's expanding your business. Now, and obviously this is where I separate from the law here and Dan comes in, but if a business had to move due to the virus, maybe they were in the city and they want to move out of the city for sanitary purposes, again, there's a fine line there, and you would probably want to talk to an attorney about that, or like Dan said, shoot the question over to the SBA. I've had that question a couple times, and the question was catered more towards, I'm looking to grow. As soon as they say that, I say, all right, pump the brakes. It's not for you to grow. It's for you to survive, your business to survive and keep going. I have one client that does eco tours here in Pennsylvania, and he needed to go out and purchase newer equipment like kayaks and other similar equipment because some of the kayaks were no longer usable. Even then, we really had to go down the road of, is this going to allow you to carry on your business? Well, yeah, right. We can't keep putting our customers out there and our members out there with kayaks that are ready to sink, right? Ready to go underwater. Now, what he definitely can't do is buy another dozen kayaks and double his amount of kayaks that are in service. So there's that fine line again with, all right, and then it may get, for some businesses that are really busy and have a lot of activity, you could be bouncing questions off your accountant or your attorney on a daily basis. So, but I would try to find a way to relay those questions. Maybe think about what you're going to have to purchase in the next 6-8 months, a year, and if you got idle loan funds or you're about to get a loan approved, I would do your homework and be a little proactive and just get some transparency going before you go down that road. I think those are the main things I've seen. The big thing is that word expand.
I would agree with you. When it comes to the use of idle loans, it's very business specific. Because, for instance, if I have two clients, both want to purchase glassware. One's a venue, and so the glassware very well might be an asset of theirs that they would be selling in a dissolution. And the other one is a glassware wholesaler. That's their product. In one instance, it's likely ineligible as a fixed asset for the venue. In the other, it's the supply, it's the product. And if they can't buy the product, they can't operate as a business. So it's likely not ineligible. With relocation, it's the same thing. You, in many instances, can't relocate, but if you can demonstrate to SBA that you need to relocate because of the disaster, you can seek their approval before relocating. That's actually captured in the loan authorization and approval that any business owner has to sign before they get their idle loan. It's all to say that you're always like, I laugh at what Will said about businesses, his clients calling him all the time, because all of mine call me every day saying, hey, I want to spend some of the idle loan on this bill. Is that possible? And when you get into obligations you've already had, it's even grayer. For instance, if you have a fixed asset that you purchased before the disaster, it's an ongoing obligation of yours that you have to pay. It's not necessarily long-term debt. It's not necessarily in any of the ineligible categories, except that it's a fixed asset. Can you pay for it? Can you not pay for it? It's required for you to continue operating, but you could probably get an SBA loan in another category that could cover it. So all these nuances lend themselves very well to the daily call to your attorney and the daily call to your accountant. Because while they're very strict about the ineligible uses, the eligible uses can be far expansive and differ between businesses.
And Dan, you mentioned working capital. Working capital loans were out there before the virus.
Mm-hmm.
And when the idle loan first came about, it was advertised as a working capital loan with more stipulations, of course, due to a pandemic. Generally, what a working capital loan can do is it can cover your short-term obligations in general terms. There's always exceptions, folks, right? But in general terms, short-term obligations. So, Dan mentioned you can't pay off debt. Now short-term debt, if you have a long-term note that's due to mature in 5 years, you can't just pay off that loan. I think we're in agreement there. Now, if you needed to use those idle funds to make monthly payments, installment payments on that loan that are required under that loan indenture, then in my opinion, Dan could chime in to let us know otherwise, but I believe, folks, that we can use idle funds to pay off those monthly obligations if it's necessary to carry on your business.
Yeah, obviously, Will and I think, are in agreement there. And we're not advising anyone in particular. We're not your attorney. We're not your CPA. Although, if you wanted to engage us, you obviously can contact us.
Yeah, absolutely.
But this is just general talk because, like I said, every business has different caveats to it. The nature of your business, the nature of what you're selling, the services, all factor into whether or not that debt is eligible. And Will, I think you characterized it very well, because long-term debt, you're not supposed to be able to pay it off because they want to avoid exactly the scenario you're talking about, where a small business takes an idle loan of 150K and immediately pays off all of its loans, whether they were a mortgage or an SBA loan. They don't want that to happen with the idle loan. The idle loan is supposed to make you whole. It's not supposed to put you in a more advantageous position. And so if you start doing that where they can pay off an entire long-term debt, you're in a much better position than you were before.
And so, one of the things too that people always have asked are, what are those reporting requirements for borrowers? And what sort of documents should a business retain in case of an audit? How long should they keep onto these documents? So maybe we start off with Will first on that.
Yeah, like I mentioned previously, Joe, keep those idle funds in a separate bank account. What's going to help when you need to, even if you don't get audited, and you're meeting with your accountant to get your tax returns done or your bookkeeping, having those funds, and this actually applies to any sort of loan you get. Theoretically, I mean, I instruct clients to kind of segregate funds and only draw down on certain funding options that you have. So if you want to, if you need the idle loan to pay off your monthly utilities, maybe have those monthly utilities coming out of that loan, those funds, that separate bank account, where you can easily track it. If you're, I wouldn't take owner distributions out of that account, right? I wouldn't take any owner draws out of the business out of that account. If you determine after talking with your attorney and your CPA that you could use those idle funds to maybe pay off some monthly installment obligations that are crucial to your business survival, that's what you would also use it for. And at the end of the year, you have 12 monthly bank statements, folks, and that's a good starting point. You may need to keep some receipts here and there, depending on what's purchased. But if you start with those 12 monthly bank statements, and the only expenditures that you made are on those bank statements, that's going to minimize CPA fees. It's also going to help in the event of an audit. It's also going to help management make decisions on how they're spending their money. Other than that, a lot of banks now are good with categorizing things correctly when transactions come through, whether it be on their online banking, to where sometimes you don't even need a receipt. It says, hey, you just purchased software from Dell, or it's very descriptive. You want to look at your bank statements. You want to be familiar with those bank statements, and you want to get used to doing a monthly bank reconciliation, whether your CPA does it or you do it. And folks, it's different than what we've done prior to the COVID-19, right? So these are good business practices to have. Now more so, we have this loan with more stipulations as to how it can be spent. So now more than ever, we just need to think back to all that advice that your CPA gave you, and if you took it to heart, if you decided to listen, or just said, I'll get to it. Now's the time, especially if you did receive idle loan funds. Now's the time to start, keeping good records, and the bank statements are a good start.
Yeah, I would completely agree with what Will is saying. you actually, in your loan authorization and agreement that you signed to get the EIDL loan, you're agreeing to keep your receipts, your invoices, and any canceled checks related to expenses that you use that EIDL loan for. If anyone's wondering if I am truthful or not, that's page 3 of your loan authorization. But that being said, as an attorney, I think about it a little differently. And I think about the worst case scenario, which is that you do get audited from the SBA. And there's actually been news lately that suggests that might happen. The HEROES Act talks about how it calls on SBA to audit the EIDL loan program because of the semblance of widespread fraud. And that means that each individual borrower might have to substantiate what they use their EIDL loan for. Recently in the news, we saw that the SBA Office of Inspector General also said that there is widespread fraud within the EIDL loan space and that audits might be necessary. And so in the PPP sense, everyone knows that there's the threat of SBA auditing your PPP loan to try and claw back that money from big businesses, not really the small businesses. But the same might be happening in the future with EIDL loans. And you have to hold those receipts and invoices and canceled checks, and I would also say bank statements, for 3 years, because SBA during those 3 years might audit you. If I'm the attorney working on your matter because I need to save you from paying 150% fine to SBA, or possibly defend you against criminal charges for frauding the government, which I don't think anyone is necessarily doing, given all of the ambiguity with what's eligible and ineligible. I want as much information as possible. I want what you put in your initial EIDL loan application. I want what your loan authorization says. I want the receipts. I want the signed contracts. And if you're a business who's very prudent at the beginning, you can collect all of those things immediately. If I contract with Will to rent space in his building, I want my lease agreement so I can show that I had a lease agreement that required me to pay a certain amount each month to Will. And I use the EIDL loan for that because that's one of the eligible expenses. If you don't have a lease, your next best option is to show that you've routinely paid this before you got your EIDL loan. Show that you were making these lease payments because you need to show that it's an existing obligation. But when you don't have things in writing, where you don't have things that you can rely on like a contract or an invoice or a receipt, it becomes very difficult to show to SBA that you actually used it for an eligible use.
And so as we get to the early part of next year with tax season, what should businesses on their taxes? And are PPP funds, EIDL funds, and then also the grant, are those taxable as well? So maybe we start off with Dan for that question.
Ooh, you threw a CPA question in.
I asked for it around a little bit. Yeah. We can start with Will. We can start with Will first.
No, it's okay. I'll give my 2 cents. Obviously, I'm not a CPA. I'm not a tax attorney. So anything I say is merely just commenting on the SBA program. But your PPP loan, your EIDL loan, your EIDL advance, which was a grant that was given to a lot of businesses based on the number of employees, you should be prepared to report all of those. And then the taxability of each is a huge question right now, especially with PPP, whether or not you can deduct certain expenses that you use PPP loan money for. And with that primer, I'm going to throw over to our CPA, Will Winter,
there we go.
to talk more.
Yeah, so, that question, there's a completely different answer depending on whether we're talking about the PPP or the EIDL. The PPP, if the entire loan is forgiven, meaning that, you don't have to pay it back, then in a sense, well, one, the loan proceeds are not taxable income. But on the flip side, if you got a $10,000 PPP loan and you use those funds, let's just say easy math, $6,000 for payroll, qualified payroll purposes that qualify for forgiveness, and then the other 40% you used on rent, utilities, etc. You got that $10,000 loan forgiven. Now, that $10,000 is not income, so you don't have to pick up $10,000 of taxable income. But on the flip side, that $6,000 payroll expense and that $4,000 rent and utility expense, that you would have otherwise been able to, which is normal business operations, and you didn't receive that loan, you would be able to deduct those. But since you used the triple loan funds and you got that triple P loan forgiven, you are not able to deduct those $10,000 of expenses. So indirectly, your taxable income for the year is going to go up by $10,000. So it's going to result in higher tax, folks. That's going to be sticker shock for a lot of business owners out there. And that's just a $10,000 loan in my example. Some bigger companies out there that you've got hundreds of thousands of dollars here. So there's going to be a significant eye opener, if it isn't already, in terms of just planning for tax time. Now is the time as we approach November, where we meet with a lot of our clients and go over year-end tax planning. This is going to be a big item on our agenda. So make sure you're aware of that, because it's going to be a big impact. And even it's still going to affect Schedule C filers, sole proprietorships. One thing I want to point out, if you are a sole proprietor or a shareholder employee of an S Corp or a C Corp, there is a limit to how much of your salary can be forgiven. So you may not meet the requirements to get your triple P loan forgiven. If that's the case and you end up having to pay that back with the 1% interest rate, then folks, those expenditures would be deductible. I know that was real clear. Everybody got that the first time. No one's confused whatsoever. No, but it all depends on if you get the loan forgiven, nothing's deductible, nothing's taxed, right? If you have to pick up that loan and you have to pay it back, then it's just like getting a normal loan, going out and making business expenditures and being able to deduct those expenses. The EIDL loan, they are no longer giving that free grant, $1,000 per employee, up to 10 employees. But for the individuals, the businesses that received that grant, let's say they received $10,000 in grant money, that is picked up as taxable income. Just similar to how the triple P mechanics work, since you're picking up an income, let's say you use that grant for business expenditures, for anything business related that you can normally deduct from your business income, those expenses are deductible since you're picking the $10,000 up in taxable income. The catch there is that $10,000 that you picked up, it's free. It literally is free money. That means that you're not getting a tax deduction from it. You're just covering business expenditures. Now, on the flip side, the loan proceeds, let's say you got a $150,000 loan from the EIDL, and let's say you expended that entire $150,000. Those expenditures would be deductible if they would otherwise be a taxable deduction, of course, because you're on the hook for that money, and then you pay it back at 3.75%. And obviously the interest that you would have to pay on that loan would be deductible. Now, a lot of us are gonna, a lot of viewers and a lot of business owners that got 150,000 or a real high amount, right now, most of us are probably having our interest being accrued right now on all that money. So come next year, when that first payment is due, you're going to be fixed as to, how much that payment's going to be. I think it's around $700 and something a month if you got the maximum loan funds, because it's 3.75% at 150K. I think it's around 750, give or take. Majority of that is going to be interest in the first several payments, right, for a year or two, a couple of years down the line, several years actually, because it's a 30-year loan. So that's another thing that we have to be aware of too. We're not going to see our loan amounts go down in the first several years because it's going to be mostly interest, but you get to deduct that interest. So that's the main difference there is if you're picking it up in taxable income, then it's deductible. If you're picking it up as a loan and you have to repay it, then you get to deduct those expenses. Otherwise, we're going to be in for a big surprise come tax time.
We've talked a lot about the reporting requirements, the compliance with the EIDL, but let's talk about more optimistically here. What are those potential opportunities to secure additional funding through other SBA programs? What other programs might exist out there for folks who may have applied for PPP or EIDL right now?
So I think that's a great question. A lot of businesses got PPP loans. They got EIDL loans. They even got some Section 1112 subsidies if they already had SBA loans in other categories. But I think businesses right now, without a stimulus package, need to be looking at whether or not SBA lifts the max for EIDL loans. It's up to $2 million. They need to explore other 7A loans in case they need more money for their business to operate and they can take on that debt. If they want to expand, if they want to buy property, if they want to buy fixed assets, explore a SBA 504 loan with your local small business administration district office or an SBDC near you. There's also bridge loans for those who don't have EIDL loans, who tried to get an EIDL loan and it was denied or didn't like the offering, where it's basically if you get more than 25K in EIDL loan, you have to collateralize. And if you get more than 200K somehow, you have to give a personal guarantee. Some businesses don't like that, but you can get a bridge loan of up to 25K if you haven't gotten your EIDL loan and you're waiting on an EIDL loan. So there's a lot of opportunities there. When it comes to the stimulus package that hopefully someday gets passed, the industry's hardest hit in many respects are restaurants, hotels, a lot of entertainment, anything in what's called North American Industry Classification System Code 72, which is accommodations and food. All of those businesses are looking at additional money in a stimulus package. They're looking at up to 18 months of Section 1112 subsidies. And for those who don't know, that's basically SBA paying its own loan payments. They're looking at set-asides for an additional PPP loan. So there's PPP money that would be put aside for restaurants and hotels specifically. There's also another program that's totally new that is just for venues that get 70% or more of their revenue from live events or based on ticket sales. Same thing with agents who work on those meetings and work on those events. They can also get a venue loan. A lot of those opportunities, though, are contingent on the HEROES Act 2 or another stimulus package being passed by the House, Senate, and adopted by the president. Unfortunately, obviously, we're getting in crunch time, and they are negotiating actively, but the election is less than a week away, and it's getting less and less likely that we'll get it before the election.
Yeah, and also too, depending on what state you're in, there may be some state grants available as well. I know Dan kind of mentioned that a little bit too. Here in PA, they've rolled out a number of grants that are specific to certain industries. Whether it be healthcare or the construction industry, or it's just simply made available through minority or women-owned businesses, for example. There's a grant going around, or went around not too long ago, where I believe up to $25,000 was given out to businesses that were minority and women owned. Due to first priority, other business owners would be eligible for those funds. There have been a couple things like that going on around here in Pennsylvania. I know New York has a handful as well. So you'd want to look into state grants as well to see if you'd qualify for those. Because again, folks, those are grants. And a lot of times grants, as we know them, they may not need to be paid back as long as they're used, and as long as for dedicated purposes, and you substantiate what you use those funds for. And history says that states are typically more on top of making sure that business owners have the proper documentation and substantiation when it's required.
Yeah, Joe, one thing I would add is if businesses haven't gotten the 150K in the maximum EIDL loan already, they can request an increase from SBA up to that maximum. Under normal circumstances for the program, you would get your initial EIDL loan, which is called a phase one. And then if you continued to have effects from the disaster, you had a substantial need for that money absent any improvement, you can ask for an increase of up to $2 million in normal instances. For COVID, though, because it's so widespread, SBA has limited that max to 150K. So if you got 88K in EIDL loan already, and you are still having difficulty getting any revenue, getting any customers in the door, paying your obligations, and you're worried that you're really going to be strained over the next few months, you can request an increase by sending a letter requesting that increase to SBA and providing some additional information, whether that's your Q3 sales, your expenses that you've incurred getting the sanitation equipment, or the expenses you have in getting PPE for your employees. All of those are good factoids to throw at SBA to warrant more money. It's just, unfortunately, we're still bound by the 150K limit.
Now, how would somebody go about applying for that additional funding? Do they go back through the SBA portal, or what's that process look like for that?
The best way that I would advise people to do that is to contact SBA by email. Don't try and use the portal for this because the portal's not made for it. The portal is made just for your initial loan and to quickly process that. What you would need to do now is you need to send a letter. Well, I wouldn't advise using the mail because they do have email and it's quicker. But send it to disasterassistance@sba.gov or PDC reconsideration@sba.gov, or the Associate Administrator for Disaster Assistance, James Rivera. You can send it to any of those people and it'll be funneled to the right person. But generally, it's not a form that you're filling out. They might ask for more forms. They might ask for more info. But it's just a simple request saying, I need more money. I have a substantial need for it. The pandemics continue. There's a lot of things that you could put in there. But again, just an email or a letter.
So we have an election coming up in about 6 days. And, there's been discussion about, what would a Trump administration, if it gets the chance to go on for another 4 years, or an incoming Biden administration, what they would do for stimulus. So what have you both heard, or what are we looking out for in terms of different programs and initiatives that could help businesses in the next few months?
So I'll go first. The difference is the amount of money that's going to immediately be put into the economy for a relief package. In my view, this is my personal opinion. The Trump administration and the Senate Republicans have advocated for a lot of skinny stimulus packages, basically enhanced or expanded PPP funding, some Section 112 subsidies in some instances, some changes to EIDL, but generally it's about $500 billion. It's very small. It's supposed to be very targeted. The Democrats and the Biden campaign have suggested that they want a bigger package. They want close to $3 trillion to not only do PPP, not only do Section 1112, not only do EIDL, but also create other funding mechanisms for small businesses that are either done by the states in the state relief packages or in new programs like the venue loan program that I mentioned. And all of those are captured in the HEROES Act 2. I think where we're getting hung up right now is the price tag. And that's the biggest difference between the two, is the Republicans from their actions want less of a price tag. They want more targeted relief. Democrats want a bigger price tag, more widespread relief. And I think that's the nuance you're going to see depending on Tuesday's result.
Well,
yeah, I agree with Dan. We would all love to say, all right, you want $3 trillion, we want $500 million. right? 2.5 trillion, we take half of that, let's call it a day. I think the whole other, at least the country, I think would be happy with that, right? And, you know, although, you know, maybe that's how Dan and I would make a decision, right? But we all know from listening to the news these last several months or years or decades that it's never going to work that way, unfortunately. You know, I always tell people too, when they ask me about, you know, anything politically related, I say this, I say, you know, whenever there's new tax code, for example, rather than, you know, certain individuals get around and see if, all right, maybe let's make this decision together. They should get CPAs from around the country, and maybe 12, like 12 angry jurors, or, you know, and have them all sit in a room for 3 days or 3 weeks or however long it takes, and bounce all these ideas that everyone has across and say, all right, do these all make sense, right? From a tax perspective, from a planning perspective, does this really make sense, right? And at the end of the day, I'm sure we can come out with a package that would make the most sense when the US tax code comes into play. And there's no exception here with, you know, all right, you know, where are they getting this $3 trillion number from? Where are the Republicans getting the $500 million number from? You know, what the $500 million, $500 million, how is that going to be dispersed? You know, what you know, is any portion of that earmarked towards certain industries, certain demographics? Now we have another 2.5 trillion, right? Essentially, or you know, give or take. It's a wide margin. You know, all that extra money, where is all that going? I'm sure we can wait and see what the regulations will show, but then we'll all have to take a couple weeks off to read a 400-page summary, as they call it, right? So the bottom line is we need a lot of businesses out there still need a lot of assistance. And here we are come November, no one really knows how next week's going to end up. We are already living a year of turbulence that'll go down in history, whether we're on the tail end or on the uptick. It could flip flop again, and you know it's a constant roller coaster.
Yeah. I would say to Will's point, to be pragmatic, both sides have the intent of helping small business. I don't think any of us disagree with that. That's one of the reasons why I like small business law, is that it's bipartisan. The nuance is that one side wants very targeted relief. They want to do it in a very targeted fashion with PPP and subsidies. And the other wants to be all as comprehensive or widespread as possible. And that price tag that Will was talking about is what's holding us up. And now we're in, I think, Will, your estimation was right. We're somewhere around 2.2 trillion is where we came out in between. And that's what they're negotiating right now, they being Secretary Mnuchin and Speaker Pelosi. It's just a question of timing now, because we generally agree we need more stimulus. We need more relief for small businesses. But how much and when?
Well, I would say
and who's going to get it?
Right.
Yeah.
You know, we've, I get, at least Dan and I have seen the abuse, you know, and folks, just to backtrack real quick and give some examples that are clearly, that clearly show individuals abusing these proceeds, taking these proceeds away from businesses that really need it. There are examples of buying diamond rings, extraordinarily high purchases from Tiffany's. This is all public knowledge. If you read enough, you'll find that people that got these funds they're buying exotic cars. People are getting nabbed on that. So, you know, yeah, we're talking about fine lines here with, is it crucial for your business? So many business owners out there are probably struggling just with that knowledge of, should I spend it? Should I buy this? Should I buy that? Meanwhile, you have these individuals going out there and blatantly living a lavish lifestyle. Most of us, if not all of us, aren't in that boat. So I think as long as we are careful we ask questions, and we really analyze every decision we make in terms of purchases for our businesses, I think we're going to be okay. Get the loan first, you have the proceeds, then if you need it to survive through your business, to keep your employees around, to put food on the table, odds are, you're probably going to be able to make an expenditure in that regard. Of course, with the assistance of a CPA or an attorney.
Yeah.
Well, we have time for just a couple of quick more questions. I want to make sure more of like a lightning round for this portion. And there's some questions from the audience we have here. We have one question here. A client owns his building and the S Corp that operates from that building. The S Corp has always paid the real estate taxes. There's never been a lease or a rent payment. Does this payment to real estate taxes qualify as rent for PPP?
Yeah, I think the hard part here, that the hazy line is there was no rent prior to the PPP loans coming out. I think we kind of, depending on how old the S Corp is, if the S Corp was in existence for, let's say, 5, 6, 7 years, and they've never charged rent, I think it would be hard to make a claim that those are rent payments. Now, if this is the first year or the second year maybe that the S Corp is in existence, there may be an argument to say, all right, the first year as an S Corp, we were getting a lay of the land as a new business owner. We weren't sure how our income was going to end up that first year. Here comes the second year. COVID didn't give us much time. It gave us January and part of February to kind of operate normally. We planned on charging self-rental. Due to the tax code, you're legally allowed to do that. If the rent is equal to an unrelated third-party rent, it has to be fair market value rent. So the circumstances would dictate whether or not you can take those as an expenditure. Maybe that answers your question. Real estate taxes don't qualify as an expense for loan forgiveness. It's mortgage interest and rent, utilities.
Yeah, I would agree with Will. The real estate taxes don't qualify as one of the eligible uses for a PPP loan. I would also say you have a lot of options for use of your PPP loan proceeds. This is one instance where you're really putting yourself in danger of not being able to prove that this expense is there and that you're basically doing a private transaction that inures to yourself because you don't have a lease agreement and it's not really rent. It's the real estate taxes. So I would say if you can pay payroll, pay that. If you can pay mortgage interest, pay that. And keep going down the list until you get to these really nuanced questions. And that goes for anyone using EIDL or PPP money. Use everything that's least risky and then work your way down to instances like this where you could make an argument. It's not a very good argument.
We have one more question here. Can you get an EIDL loan if you have an existing PPP loan or an SBA and an SBA 7A loan?
Yes.
That's pretty quick, right?
I'll give a little more context. So you have several different kinds of SBA loan that you can get as a business. You have a PPP loan, which you can get if you qualify as a small business and you have a certain number of employees and you paid payroll last year and you were a business as of, I think, February 15th of this year. You have 7A loans, which is a totally different process. That's approved by SBA, gone through a lender. You're eligible for that generally if you're a small business and you operate. EIDL, if you're a small business, you're affected by the disaster, you can still apply for an EIDL loan even if you got a PPP loan, you got a 7A loan, you have a 504 loan, you have a bridge loan. You're still eligible for it so long as you meet the criteria, which you would even if you didn't have the PPP loan and 7A loan.
We have one final question. Again, this is just for me. Where do you guys see, over the next few months, we're handling this pandemic right now. Where do you see the business climate? Are you feeling more optimistic? Are you feeling pessimistic? I mean, where do we see ourselves in the next few months?
I'll take this real quick. I think to me, it feels like a decade since March.
Oh yeah.
It could be the industry I'm in, public accounting, business advising.
I think for all three of us, it felt like at least 10 to 15 years.
I'm now 80.
Yeah, we're making things work, right? We've seen it. It's a behemoth in our lives right now that we can't avoid, right? We're all making ends meet, and we're all learning how to adapt to it, regardless of what industry you're in, whether it be healthcare, professional services, construction, the food and beverage industry. We are all learning to adapt. Some of us are believers of the virus itself, right? Some of us aren't believers of the virus. But hopefully, the non-believers are at least seeing that there's something out there, right? People are getting sick, and for the common good, as long as we all follow protocol and are careful around others, I think the shock is over. We're going to have to just see the roller coaster play out. I think it's going to be up and down. I think now we are more prepared for the worst than we were in March. We weren't expecting it in March. We were at our worst. A lot of us were really hit hard to where we were backed up against the corner. What the heck is this Mr. COVID-19 coming about, right? What is it? The world's over. It's the Walking Dead come to life, right? Nothing's ever going to get better. And, it affected a lot of business owners to the point where people were bankrupt now. People are out of business. And now I think if we were able to survive through that, I think that we are in for maybe a further turbulent winter, maybe spring, but I think we're going to get through it. I think we just need to buckle down, don't abuse any sort of loan proceeds, right? Because when the COVID-19 is behind us, you don't want the law to come knocking on your door, whether it be criminal, civil, or penalty related. Do the right thing, folks.
Yeah, to that question, Joe, I would say I'm an optimist by nature, a pessimist by trade. As an attorney, I have to look for the riskiest position for my client. I have to look for where things could go wrong and mitigate that. But by nature, I'm an optimist, and I'm really hopeful of where we're headed either way on Tuesday. I think the country is seeing the pandemic play out to an extent. It's definitely not over. It's definitely resurging, and people need to take it seriously. But you've seen a lot of businesses react to it. You've seen a lot of businesses doing the hard work to pivot or to rebrand sometimes, or even develop a transaction that lends itself well to social distancing and curbside and takeout. And the ability of small businesses to be agile and react when consumers have spending bandwidth is what's giving me hope. And then you have to, at least I try and keep in mind, that a crisis is an opportunity. Just like 2008 sprang up fintech and gave us a lot more rights and opportunities for finance, whether it's business to business, business to client, client to business, whatever. This is a healthcare crisis as well as an economic crisis. And it's changing how we interact with one another. For example, with my own business, before COVID-19, I would do the majority of my consults in person. A business would come to my office, sit in a conference room with me for about an hour. We'd go through their problems. Now, I can't think of a single client that hasn't talked to me via Zoom or WebEx or any of the virtual services. because it's more convenient. They don't have to drive. They don't have to spend the money to get to me. My practice has gone from being in the Hudson Valley alone and a couple national clients to being all over New York State simultaneously. So there are huge opportunities for businesses that reframe the pandemic as an opportunity to revisit their process, to look for the novel changes they can make in their industry. And then hopefully the government gives them a little boost, whether that's in financing, government contracts for more American businesses, or something of that nature in the next few months.
I think certainly as we look through the next few months here as we're getting out of this pandemic, I think, Dan, you brought up a great point about, what is that recalibration for American businesses? And obviously we have businesses here in the Northeast, but all across the country that are facing, varying challenges. And obviously next week will be certainly something to watch about where this country will go economically, but it's certainly, there's a lot there to chew on. That's all the time we have this afternoon. Great questions, incredible feedback. Dan and Will, you were absolutely incredible. Thank you so much for being on this panel. I'm going to throw it back over to Sam from NYSEG.
First, just want to thank Joe, Dan, and Will for your conversations today, your insight that you shared with the audience. Great conversations, great discussions. Want to thank the audience for joining us today. Please follow Ignite U on social media, as we have a couple other events coming up in the next few weeks that you may find value in, and also to stay up to date on our next accelerated program opportunity. Thank you, Joe. Thank you, Dan. Thank you, Will. Thank you to the audience, and you guys all have a great day.
Thank you, everybody.
Thanks again.